Make sure all the lives get connected and started before we start. 7:11, perfect time, divine timing. Starting with the 9 today, that's beautiful. Okay, welcome everybody. This is Culture Shock University, stock class for beginners. I'm going to be your professor. I'm the owner of Culture Shock Investments, Michael Clark. And today we're going to be starting off with technical analysis. This is one of my favorite topics because this is one of my favorite forms of stock analysis. You get to do technical analysis, we did fundamental analysis, which looks at the meat and bones of a company, its earnings reports, its income, its monthly, its revenue, and that kind of stuff. We're looking at the internal success of a company, how it's operating internally, its expenses. We're looking at its income statement. We're looking at those kind of things when it comes to fundamental analysis. And that's great for long-term investments. Now, for my people who are looking for more short-term opportunities like option trading or even short-term investments and trying to understand when to get in and out of an investment that you may not want to hold for 3 to 5 years, that's when you're going to start using technical analysis. And that is what we're going to go over today. So make sure you share the space. Let's get it out. I want you all to share it with your friends and family. Let's get everybody in here before we get started. And once we get started, we'll be rolling. I'm going to pull up some charts for you guys, show you technical analysis on my chart, show you the things that I like to look for on camera. The very basics. We're not going to get too deep into the. So when you look at a stock chart and you're pulling up a candlestick, what are the points of entry and exit? You got to understand these things to your advantage. If not, it's just going to stuff to you, okay? So we're going to break down and decode the matrix today and get you to understanding this technical analysis. Like I said, make sure you get the space shared out. So I'm trying to make sure I do right now. Actually, let me make sure I share this out and get everybody in here that I know. Let me make sure it's coming up live on my TikTok. It should be. All right, I believe it's live on TikTok. I don't know why it's not showing on here. Let me just double check something. Let me double check something real quick. Actually, yeah. I don't know. I think the TikTok live may be a little delayed, but YouTube. What? Streaming not allowed on TikTok? Why does TikTok do this to me so often? I don't understand that. I don't understand you, TikTok. Why are you doing that to me? Oh, I don't know. I don't know what's going on with TikTok live, but we're live on YouTube. I'll put up the session later on TikTok. Most important is the information is going to be out there for you people, okay? For the community, for the culture to take advantage of, and for you to learn so you can start jumping into these live sessions and understand what we're talking about. All right. So, welcome to Technical Analysis 101. I am your teacher, Michael Clark, owner of Culture Shock Investments, and we're going to start breaking down technical analysis. So, what is technical analysis? This is, like I said, this involves studying chart patterns, indicators, and this helps you predict the future movement of the stock based on what these patterns and indicators are telling you. Past performance does not guarantee future results, but technical analysis gives you a big leg up in predicting what is to come in the market. So, like people, the movie The Big Short, the reason why he was able to see what was coming in The Big Short was not because of technical analysis. They did a lot of what we ran over already was fundamental. But I'm going to show you how you may have been able to spot something like that using technical analysis on the charts, especially the macro charts, okay? So why use technical analysis? It helps you find entry and exit points. It's useful for short-term trading, swing trading, and timing your investments, which is crucial and key to maximizing profits. Entering and exit at the wrong time can cost you hundreds of thousands of dollars if you do it with a certain sum of money. Even with $5,000, if you exit and enter a stock at the wrong time, you could be losing out on hundreds of thousands of dollars in investment. Okay, so it's fundamental analysis versus technical. What are the differences? The main differences are the focuses, the tools, and the time frames. So the focus is, for fundamental analysis, is company performance focus. So like I said, we're looking at financial reports, we're looking at earnings reports, we're looking at income statements, we're looking at stuff like that. But with technical analysis, we're strictly focused on the price movement of the stock as the main substance of what we're determining our entry and exit off of. Okay. Then you have the tools you use to determine this. And the fundamental analysis, you got the financial statements and the different ratios we talk. And then you have in technical analysis, you have the charts, indicators, and volume. So the indicators can get a little overwhelming if you are getting absorbed into too many of them. But I'm going to give you a couple of my favorite indicators to use. Indicators and lessons to come. But for now, let's just understand that these are a tool that you in your market predictions. Time frames. Fundamental analysis is more for long-term investment. Technical analysis is for more short to medium-term investments, whether that be stock options, futures, or just stocks themselves. Okay. Keep it moving here. So, what is a candlestick chart? This right here is called the candlestick, and it's called that because you can obviously see it looks like a candle with the wick at the top. This will be the wick you'll light, and this will be the candlestick body. All right. So these will be wicks, whether they could be on the top of the candlestick or the bottom, and then you have the body of the candlestick. Okay. So this could represent price action for a particular time frame. Each one of these candlesticks could represent 1 minute. They could represent 1 day. They could represent 1 week. They could represent 1 month. They could represent 1 year even. So you could zoom out further and further on the market and look for patterns on these candlesticks based on different time frames. I like to zoom out further because I feel like further out time frames give you a more accurate depiction of what's going on in the market. So each candlestick has 4 points. They have the opening point. It has the high. It has the low. And it has the close, where it closes at. Okay, how do you determine that? Looking at the candlestick, the opening point on a candlestick is going to be where you see that initial line on the candlestick. Either if it has a top and bottom wick, it's most likely going to be the initial line that's going towards the bottom side if it's closing as a up candlestick, or the top part of the body that if it's closing as a downward candlestick. So the only way to tell that momentum is to look. Oh, let me go back. Is to look at the price movement. So right here we don't have prices in, but this is going to tell you got the high of the candlestick is up here where this top wick would be. That would be the high of the wick. This will be the high of the body. This will be the low of the body. This will be low of the entire candlestick. Okay, and where it closes at would be where the candlestick closes, which is right here for this candlestick. This is where the price closed. For this candlestick, it was right here is where the price closed at. And for this candlestick, it's right here where the price closed at. They can close lower. They can close higher on the candlestick. But I'm going to give you an indicator that's going to help you determine which side it closed on. Easier. It's going to help you engage that momentum. Candlestick anatomy. So we had the body. That's the range between the opening and the close. That was that green portion of the candlestick we saw. That's the body of the candlestick. The wick is the skinny part of the candlestick I showed you at the top and the bottom. Those are high and lows beyond the body. Okay? If you have a green candle, it usually represents a candle that closed higher than it opened. If you have a red candlestick, it usually indicates a candlestick that closed lower than it opened. All right? So those are 3 green candlesticks. So you can see on each one of those, these all closed higher than they opened. So they opened down here. This is the body. You know, it might have pulled down here and tested down here, but it came back up and it closed up here. This candlestick opened down here. This was the base of the body. It may have came down here during the price action and came all the way up here during price action, but it closed right here. It closed higher than it opened up at. And the same thing for this candlestick. It opened up and it pushed up here, pushed all the way up to here, came down, came all the way down here, but it ended up closing right here, higher than it opened up at. So this gave me made it a green candlestick. It would have been red if it closed lower than it opened. If it closed down here and opened right here, this candlestick would be colored red. Okay? So that's candlestick anatomy 101 for you. Let me give you a trend. Let me give you an example of how it looks like on TradingView actually. So I'm going to take my strat off. So you have, let me put this on a weekly or daily too. So you see how you have red and green candlesticks on here? All these red candlesticks. See how this candlestick, even though like it went all the way up here, it closed higher than it opened at. So if it opened right here on the day, it closed down here. Even though this body is filled up, it may have opened up here actually and filled the body and closed down here. That's more likely what happened in this candlestick because it has no wicks on it, meaning it opened up here, almost went above the previous day's high, but then came all the way down and closed down here and never came back up. And you can see that on the next. This is a candlestick that represents a day of trading because I'm on a daily time frame. So like I said, you could go from a 1 minute time frame on a stock all the way up to 3 minutes, 5 minutes, and you could go all the way up to 3 months, where each one of these candlesticks represents a whole 3 months worth of trading. All right. So I like to go to these kind of candlesticks that go further out. Like I said, they give you a better macro perspective on the market and help you determine how to manage your investments in a more accurate way than what the short-term charts are telling you, okay, or the smaller time frames are telling you. When you don't want to be gamblers, you know, there's a lot of people that master the scalping market and they get really good on those small time frames, but as a beginner in the stock market, you definitely don't want to start yourself out in that area of investing. You want to start off on the higher time frames. They're easier to manage and easier to predict movements in, okay? You don't want to get caught up in trying to predict movements on small time frames when you're just learning what a candlestick is. Take your time, relax, be patient. It's going to come to you. So you have trends and timelines. When we're talking about trends, we have the trend type, what it looks like, and the meaning, okay? So the trend type, you see an uptrend in the market. The trend type, what it looks like, and the meaning. Type, you see an uptrend in the market, it usually means the candlesticks are printing higher lows. Higher highs and higher lows at the same time. What that means the market is bullish at the time. So bullish, when you hear people talking stock terms, when they say bullish or bearish, bullish usually means the stock market is doing good and it's going up. Bearish means the stock market is doing bad and it's going down. So that would be a downtrend where you have lower highs and lower lows. So what does it mean by, and sideways, you have flat price movement, which is consolidation or indecision when you have sideways price movement. So let's go to the chart now and see what it's talking about when it says bullish price movement or momentum when we have higher highs and higher lows. Let's see if we could find that in the stock chart anywhere, okay? We're going to go back to a time where there's some bullish momentum came into the market. So when you're identifying higher highs, what you want to see is the high of candlesticks as it gets from a certain level. As you can see right here, you can consider this to be consolidation zone because it gets trapped within a certain price range, but I'll go over that in a second. Right now, we're going to talk about bullish price movement. So a higher high would be, you have a candlestick here, and this candlestick has printed a high, right? Did this candlestick's high breach this one? So let's see. If we have a high on the candlestick, right here in the top left, you'll see the prices of the candlesticks. You get the opening price, the high, the low, and the closing price of the candlestick, okay? So when you're highlighting your candlestick, pay attention to what these prices are telling you. So I see the high on this candlestick right here says 269.49. Then the high on this candlestick says 273.43. Okay, just because the candlestick's red doesn't necessarily mean it was a bad day. It just means it closed lower than it opened as. Now, this could still happen within bullish momentum as you see, because that's a higher high than the day before at 273 versus 269.49. Now, is the low higher? Because the low on this day is 212.11, right, on this candlestick right here. Actually, let me get this thing out. So on this candlestick right here, we have low. We got this low right here sitting at 211, 212.11, and the high right here is going to be at 212.11. Okay, but the candlestick next to it has a higher low. The higher low is 246 versus the 212.11. The low on this candlestick is 246.63, and the high is 273.54. Both are higher than the previous candlestick. And this indicates bullish momentum to me even stronger because this is a weekly candlestick to me. I mean, weekly time frame. If this was on a 1 minute time frame, it could still be bullish, but it may not be a bullish momentum for a long time. When I see stuff like this start to trigger on the weekly or monthly time frame, I know we have something cooking up in the market, whether that be to the upside or downside. So let's check the next candlestick. Now, like I said, we're looking for bullish momentum, so we're looking for higher highs and higher lows. I typically like the higher highs. The higher lows are important, but to me, the higher high is the most important thing to show that it continues to push above the high of the previous day or week, showing that it's pushing momentum higher and higher. So right here, we have a high of 328.71 after having a high of 273.54. And then we have a low of 238.88 after having a low of 246.63. So you see how this has a much higher high on it at 328, but the low is still lower than the previous candlestick. Are you going to gauge that as not bullish momentum? No. I'm gauging that as bullish momentum because, like I said, the high is what's pulling the market up and giving it new heights to reach or penetrate above, new ceilings to break. And as it keeps breaking that ceiling, it's building more and more momentum to the upside. So that's what it's talking about by higher highs and higher lows on the candlestick when you want to determine bullish momentum. And the same thing for bearish momentum. You can see bearish momentum come in as the stock chart starts to slope down on you. You can see that's that bearish momentum coming in, right? So we're looking at the Tesla chart right now. So Tesla off on January 21st. 27th. Why would I say that? Because you have a lower high and a lower low coming on this following candlestick right here. So with this candlestick coming in, oh, here we go. So you see, there we go. So the opening of this candlestick, the high of this candlestick was 433.20 and the low was 405.70. The high of this candlestick was 419.99 and the low was 384.41. Okay, so you see 433.20, 420, essentially 419.99. That's a lower high, right? So that lets you know momentum is starting to slow down some. It's not penetrating the highs of the previous weeks. We're losing some momentum here. The stock market is slowing, or this particular company is slowing down. And the low here is 384.41 versus a low of 405.78. Okay, so now you got a lower low coming in, and this is on a weekly time frame. Like I said, you could identify this on smaller time frames. It will be helpful, but the larger time frame you identify moves like this on is going to give you a good hint that momentum's getting ready to shift in that direction. So if you're looking on smaller time frames, something like this may not stand out to you as much because this was a green week. So it may look like in the middle of the week, like, oh, this was a pretty decent week. It closed at higher than it started off at, right? A green week. But no, that's not the case. It was still lowering momentum when you zoom out and look at things from a bigger picture. So that is how bearish momentum looks. Lower highs and lower lows on those candlesticks. And sideways flat price movement is consolidation. Consolidation sometimes takes a little bit of time for you to identify because it has to play out over, I say, over more than 3 candlesticks. If you got more than 3 candlesticks sitting within a certain price range, you're probably starting to get into a range. So let's look at right here. Perfect example. You have Tesla sitting in the range. So Tesla right here on May 5th, it broke out, right? It broke out from 284.57. The next day it opened up at 321.99. So that's a big $40 jump right there in the stock price, almost $40. So we consider this a breakout. Once this breakout happens, we want to see if it's going to be continuation on the breakout, or if it's going to break back down, or if we start consolidating like it's doing right here. So how do you judge when you're consolidating, right? How do you know when this begins to happen? When you're starting to say, okay, we're starting to get chopped up. We're in the choppy zone right here. You're going to know that by looking at the low of that candlestick of where we had the breakout at. So this candlestick right here was the breakout candlestick. The low of that candlestick is 271. We want to say, do we ever get below 271 and start closing below there consistently, like candlestick bodies? Because a wick is one thing. To close above or below a level, you need the body to close below that level. You could get a lot of wicks above and below your breakout levels, but if a body doesn't close there, then that's not an official breakout yet. So do we get a close below 271? And then when we had the breakout with the high of this day, the high of this day was 320. The highest day was 351.62. So now you could draw even a range there on the chart using the tools. One of the tools is this range tool. So we could draw that range tool and draw all the way across and see off of those two price levels. That top price level I gave you and that bottom level I gave you around 270.86 and the top level around 350.60. Do you see, as zooming in, do you see any bodies of candlesticks closing outside of those two levels? If you don't see any bodies closing outside of those two levels, then you're staying in the consolidated zone. We broke out and never got any. It's not closing higher than where it broke out to on that initial breakout day. I mean that week, because this is a weekly time frame. It's not closing higher than that. But on the way back down, it's not getting lower than it was on that week before it broke out. Okay? So it's staying within inside that range. So yeah, we had a breakout, that's nice, but is it really continuing? Or is it just that breakout was it and now it's going to sit right within that zone of where it broke out in? And that's exactly what Tesla's doing right now. You're in a consolidation. This is a perfect example of consolidation happening. Now you're going to determine when that consolidation is over by when? By determining if we get a body candlestick closing above that 350 or below that 270. That'll identify, boom, the range is broken. We're breaking out of consolidation. Let me enter my trade, or let me enter my investment, or let me take my profit, or let me cut my loss. One of those things should be triggered by those events happening. If you're not making some type of movement on breakout from consolidation or breakdown from consolidation, then you're most likely missing the opportunity. These are the opportunities that the market presents, and it gives you a chance to increase your portfolio drastically by being able to predict an up or down movement to come. So like a down movement here, if you're predicting a movement like this coming down from 430 and you could see it coming based on your technical analysis when we broke out of this consolidation zone up here. Let me draw another one up here for you so you can see what happens. I see right here we had a breakout, right? So what do we say? We had the week before breakout, we had the top, and then we had to go straight across. So now this was a consolidation near a high. Right here you could have saw the consolidation breaking out or breaking down once it got below this 350 level. You could have started taking puts on Tesla and riding the wave down. Now you don't necessarily know exactly what's going to stop you. You have to set price levels, and that's something that comes later that I will show you. But consolidation is not something to ignore. It's very important when the market is going sideways. It may seem like the most boring time in the market, but it's very important to keep an eye on whenever it breaks out of that range, because once it does, it usually gives you a nice big move like it did right here. When it broke down out of consolidation, we got a nice big move from 350. It came all the way down to 215. Okay? That's a very big move in the stock. And that's all being seen by when you have a breakout of consolidation zones. Beautiful, beautiful. I love it. So that's why you want to identify trends, uptrends, downtrends, and consolidation or sideways trends are important to identify to determine where the market is about to go. If you could better predict where the market is about to go, you could better position your money to make money. So you have a thing called drawing trend lines. Drawing trend line, this is a little tool that you're going to be using in your TradingView apps. I told everybody to download TradingView before lesson 1. That was one of the main tools we're going to be working with. And TradingView has a tool called the trend line indicator. We're going to start using that. I'm going to show you a little bit how to use that today. And to see a uptrend, you want to connect 2 or more higher lows and connect 2 or more lower highs for a downtrend. So we just talked about higher lows and we talked about lower highs. So for a downtrend, it's trying to get you to measure it from the top down, and from the uptrend, it's trying to get you to measure it from the bottom up. So these going to act like support or resistance levels for you once you draw them on your chart. Okay, trend lines are very important. Got my guy G in my group. That's one of his favorite tools, is the trend line. He says, "Oh, the trend is broken. The trend is broken. We broke out this uptrend, or we're breaking out of a downtrend." And usually those are strong signals to let us know that, okay, it's time to pivot our positions. If we're in the up, if we're in calls and the uptrend is broken, we need to start pivoting the puts, or if we're in the calls. So it said connect the dots on what it said, 2 higher lows in order to identify an uptrend, right? So I'm gonna draw one here. Let me go ahead. Let me zoom out a little bit. Let me go to the daily because it's a little bit easier to do this on the daily. Need more points. So let's say we've entered an uptrend recently on Tesla, right? So you're going to take this. This is called the trend line indicator. It's usually literally the top left corner of your trading view. You'll see this one is for the cursors. This one says trend line and tools. So this is your lines, channels, and pick the forks. I don't really use the pitchforks, but you're going to use these lines a lot. So the trend line is going to be one of the tools you're going to use a lot. I would favorite that. You're going to use the horizontal line a lot. I would favorite that. And parallel channel is going to help you determine these ranges that we're about to talk about. But the trend line is the beginning of understanding how to use the parallel channel, okay? That's my favorite one when I want to determine something breaking in or out of a range. I put it in a channel. So you want to connect 2 higher lows on a chart in order to identify an uptrend coming in. So right here, if you want to identify this uptrend, you could do higher low and higher low. So these are 2 higher lows right here, right? That's connecting. And that will give you your uptrend line, right? So now you just want to now all you're going to do is take that and drag it all the way up through as far as you want or as far as you can on your chart to help you determine how long this trend could potentially last and when it's going to break, if it breaks. So that's going to be your anchor, okay? So you're going to know that as far as this line is drawn out, you could draw it out as far as you want. But how do you know you're still in the right spot? Is that this line, this low line is being touched, the higher low is being touched continuously. So as long as these 2 lines are still connected down here, you're on the right trend line. And you could drag it out as far as you need to. Now, you could say, oh man, you could look at this line and say whenever it gets below trend or it starts closing bodies below here, you could say, okay, we're getting below trend. We're starting to close or breaking the trend back to the downside. The uptrend is not holding. But as long as it holds along this line, we're holding the uptrend. And Tesla is holding on by, the skin of his teeth right now today on that last daily candlestick that we see right here. But you can see it's still on that trend line. So we're still in the uptrend on Tesla. Now you could tell when it breaks to the downtrend when you could connect 2 higher lows together and start angling down. So that's an uptrend line, right? So now when you identify a downtrend line, you would identify one. You could identify it coming back here. You could have took the trend line and said, boom, we have a high right here. You can start the line there, and then we got a lower high right here. So these could be your 2 points of anchor right there, right? And you're anchored in off of those 2 levels, and then you could just draw it straight, and you could just continue to pull it out straight down, straight down, straight down, straight down, straight down. And that will be a sharp downtrend, but don't worry about how sharp the angles are. It is what it is, okay? Don't try to create your own angle by saying, oh, I think it should be right here, or I think it should be over here, based on how you feel. Follow what the trend line is telling you, and when the trend breaks, the trend breaks. You either identified a new trend or you, most likely identified a new trend or you identified a consolidation that's happening. So this was the downtrend that Tesla was in, right? So now, did it break it by going directly into an uptrend? No, it broke it. Sometimes you could break out of a downtrend or uptrend by going into consolidation, right? So this downtrend, because it didn't keep going down, it started going sideways as it did right here in these 2 candlesticks. We broke out the downtrend and entered some little form of consolidation for 2 days, right? But after that consolidation, you can see it starts to angle up and start this uptrend from that base. So this is on a daily. Like I said, these are small time frames, and you'll be able to find a lot of up and down trends on smaller time frames. But when you go on a larger time frame, you can still see it kind of forming here on this small V-shaped recovery we're doing on Tesla. But you're going to see different trend lines if you go to different time frames. You're going to see the trend line for a daily may align slightly with the weekly, but it may not be perfectly aligned with the weekly because the weekly is stepping out a little bit further. And a daily time frame may align closely, a daily trend line may align closely with a 4-hour trend line, but it's going to be slightly different because it's sitting on a higher time frame. But it still could show you. So if you make trend lines on higher time frames like the weekly and daily, and you start your trading on 30-minute time frames, those trend lines are going to appear on your chart and help you determine when you're breaking in and out of trends. So this is a 30-minute chart, and we see the uptrend line right here on Tesla. So look at how beautiful this is. We have an uptrend line that we drew in here, and it's giving you a perfect point of resistance the whole day for Tesla. So Tesla opened up at 320. It came all the way up to the trend line, and right at the trend line, it started to resist because it put in what? We see these wicks coming in. No bodies are closing above the trend line. So the trend line will give you a great range for you to trade on that day, letting you know that Tesla stays, anytime Tesla gets up into this range, you can start entering puts because it's not breaking the trend line past that and breaking to the upside. It's holding below or it's holding on that line. Okay, so you know if you're in a call, you should be taking your profit when you get up here. Taking profit, and it'll play it out perfectly for you. So that's the power of some of these indicators and drawings, okay, as you see them being useful on smaller and larger time frames once you learn how to do them properly. But you got to know how to draw them. You can't just be putting lines all willy-nilly on your chart, okay, and having them look crazy now. So that is drawing trend lines. Common candlestick patterns. You're going to get into learning some patterns. Technical analysis could go deep, so make sure you're taking your notes. Make sure you're sharing the space. Make sure you are sharing the stream. If you're on YouTube, I'm going to be posting this into the Discord as well. So make sure you subscribe to the Discord. So, common candlestick patterns. We got the doji. A doji candle is indecision with a potential reversal. That's how a doji candle is going to appear to you. You have a hammer candle, which is a bullish reversal signal at the bottom of a downtrend. You have a shooting star, which is a bearish reversal at the top of an uptrend. And then you have an engulfing candlestick. Those are one of my favorite. Those are bullish or bearish reversals, depending on the direction. I always like a good reversal in the market. Reversals tend to bring me the most profit when you identify right when the market's reversing either back to the upside or downside. So let me show you a few of those candles that I was talking about right there. So within one day, let's see, Tesla gave you a few of those in one day on the 30-minute. So this candlestick right here, I would classify this as like a doji candlestick. So you got a high top wick and you got a lot of bottom wick on it as well. But it didn't really go anywhere. It didn't make any decision. It's indecisive. So you can't really make an investment decision based off of this candle price action. Okay? You don't see anything here. Right here, this gave you a shooting star. So a shooting star, shooting star. So a shooting star is when it attempts to go up and it's not able to go up and it comes back down and it puts in a high top wick. All right, so you see this candlestick try to push all the way up here. It didn't make it. It wasn't able to close up here in this range up here. So what did it do? It came back down and closed right down in that same range that the doji was in. But this will be considered a shooting star. That is also a bearish looking candlestick. That lets you know a breakout tried to come, but it didn't work. People tried to buy up the stock, and then sellers came right back in and sold it off down here. Now you got a shooting star where you have, right here, you have a high bottom wick where you see sellers try to sell off the stock and bring it all the way down here, but buyers bought it right back up and it closed out up here. So that makes it a shooting star. And they call it a shooting star because it got all this wick on it, and it's like a star shooting upwards. A hammer. This is a hammer. The shooting star is like this because it has this body on it, it has a tail, and it's falling down. So it's like a star shooting down through the sky. A hammer, this was like a little hammer. You could grab this part of the hammer with your hands like Thor, and this is the top part of the hammer, okay? So that is a bullish signal. That lets you know if sellers try to come in and buyers weren't having it, and they bought it right back up. So that's what happened right here for Tesla before close. At the close of the day, sellers try to sell off the stock. Buyers like, nope, we're not having that. We're buying it right back up from 326. They bought it back up to 329, pretty much 330. Okay, so those are different type of candlesticks right there that identify momentum to you. Those are momentum indicators. I like momentum. Gauging momentum in the market is very important. Gauging momentum in life is very important. Gotta let you know when you're on an uptrend, downtrend, when you're consolidating. You know, when you're on those uptrends, you gotta ride it, and you gotta ride the wave good. When you're on a downtrend, sometimes you gotta sit back, reanalyze, and look for your support levels where you need to dollar cost average or invest more into yourself before you take that pivot back to the upside, so you could capitalize more on that rise. I always make analogies between stock and life, because stock charts and life and stock analysis in life correlate a lot to me in just the way I see things and the connections. Now, last but not least, we have volume here. Volume is the confirmation signal. Volume is going to let you know whether you're being faked out or whether it's a really confirmed move. So you have volume telling you how many people bought and sold on that particular candlestick. High volume on a breakout, like we said, when it breaks out of a consolidation range, or a higher high or a lower low than the previous candlestick. To determine how strong that is, you got to look at the volume. So you can have that happen, and it can happen on low volume compared to the previous day. And what that lets you know is that that breakout or breakdown is not strong. It could be easily reversed with heavy volume coming back in the opposite direction. So if it's lower volume than average, then that stock trades on average, then that could be a fake out. You want to watch out for those when you have those breakouts, that if the volume, is this consistent with how much daily volume this company trades with on average. They'll usually tell you the average trading volume on a company when you look at the statistics. Let me see if it shows that over here. So yeah, you see right here, it says average volume for 30 days. It'll tell you this 113 million is the average volume per day. So I have up-down volume indicator down here, but they also have a volume in the top left right here. It'll tell you the overall volume for the day. So if you see 113 million as the average volume, and then you see a day trading with breaking out, but we're trading at, let's say, 73 million or 50 million, that's half the average trading volume of the day for the last 30 days. So you could say that's a weak breakout or weak breakdown. But if you see us break up and we have volume up here that says, let's say, 190 million, like this candlestick showed right here on this breakout, you could say, oh, that was a pretty strong breakout right here on this day. What was that? That was June 23rd. That was a pretty strong breakout, because that was a breakout with strong volume behind it. Okay? It wasn't a breakout with low volume, so it should have a good chance of continuation, but that's all determined about what you see happening on the open of this next candlestick. And that's when we'll get into the strat, and I'll start explaining to you guys what the strat is and how that's going to help you determine when you see positive continuation, reversal, or consolidation coming in this market. Like I said, low volume, possible fake out or trap. The assignment I got for everybody this week, I want you guys to go to TradingView or your Yahoo Finance app, but I prefer you to use TradingView. I want you to make sure you're in candlestick view mode on the chart, not the line chart. And I want you to identify the following. I want you to identify the current trend of that company you're looking at. Is it an uptrend, downtrend, or are we in consolidation, sideways trend? Most recent candlestick shape. Was it a doji? Was it a hammer? Was it a shooting star candlestick? Identify which kind of candlestick it was based on what you learned today. Now, what is the volume pattern? Do we have an increase in volume in this company over the last 7 days? Let's say I want you to analyze 7 days. Let's do 7 days. Now, we have increase in volume or decrease in volume over the last 7 days in this company. And then I want you to draw a basic trend line. Based on what I showed you how to draw a trend line today, I'm always going to give you assignments to make sure you're paying attention. How do you draw a trend line? I told you, I showed you. Pick any stock trending up or down and draw your trend lines. And then we're going to use those trend lines. You can actually submit them to me via DM if you're on TikTok. If you're on YouTube, you got my email, cultureshockinvestments@gmail.com. But much easier for you to subscribe and join the Discord. I'll have the link in my YouTube description. Everybody that's on TikTok, the link is in my bio for that. But join the Discord community. All the assignments and quizzes are posted in there for my subscribers to easily access, and you're always going to have easy access to me in there to ask questions to help you with all this. Okay, I'm doing this live presentation for free for the community, for the culture, for you guys to dive in on your own and be self-sufficient with the information I give. But if you would like my assistance and help in learning this stuff even further, then you definitely are going to have to subscribe to the community or book a one-on-one consultation for yourself or your family. Okay, so on the chart, you're going to get that trend line, at least two low uptrends. I want to see two uptrends that you find and two downtrends I want you to identify on that chart for that company. And I want you to scout for some patterns. Like I was saying earlier, I want you to look at some doji, one hammer, and one engulfing pattern. I don't think I showed the engulfing. Let me show the engulfing. How does engulfing candlestick look? So it's not too often you get a pure engulfing candlestick. Let me look on the weekly. I think we may have get some on the weekly. Let me see if I can identify one. All right, so we got an engulfing candlestick right here. So Tesla was pushing up right here. You see, it pushed up on this candlestick right here, made a high of 261, low of 241.92, right? And it closed at 260.46. This candlestick engulfed it back down to the downside. And you can see that because it got lower than the previous day. Engulfed it back down to the downside. And you can see that because it got lower than the previous was up here at the previous day high. So I'll let you know that it was up at the previous day high, and then it still engulfed and came all the way back down below the previous day's low. It didn't close down there, but if it had closed down there, it would have closed as an engulfing candlestick. But the fact that it even came down here was a bearish signal, okay? And I let you know that engulfing action happened. And what happened the next day? It finished and completed that engulfing candlestick. It continued to go down and engulfed it the rest of the way. It actually engulfed the last 2 days before that as well, if you look. So that's how those patterns could play out. Sometimes they'll give you a little warning. The stock market is good for giving you little warnings to get out or save yourself. Some people heed them, some don't, and then you get caught in these kind of moves when you get caught in some vicious pullbacks. Even though they may be short-lived, they don't feel good when it's happening. Trust and believe. Even if it's only for a week, it feels like shit. You don't want to get in those. So let's make sure we are finding and screenshotting those, turn those in and submit those to the Discord. Everybody that's in the Discord community, put those in underneath the Culture Shock University tab that we have in there. And for everybody else, if you're not part of the community, scan this QR code right now on your screen with your phone. Click the link, join the community today. You know, there's a free version where you don't get access to everything, but it gets you in there and you can have communication with the group. But once you subscribe, you get access to everything, and that's when you get the price levels, the lessons, the quizzes, the assignments, everything that help make you a better investor so you can start building wealth for you and your family, and we can start building more and more wealth in the black community. And this is one of the avenues we're going to do it in. It's not the only avenue that it can be done in, but it's one of the major ones out here. And I do teach in other areas as well when it comes to investments. It's not just all about stocks and options. You do have real estate. You do have commodity ownership out here. You do have ownership of licensures and royalties out here that you can make residual income off of. But stocks, this is definitely one of the crucial foundations that anything you make money in from all these avenues and fields, you could put back into stocks to secure your equity and grow your wealth even further. So I want everybody to learn stocks. I want everybody to learn investing, at least on a basic level, which is why we're doing these classes. So I want you to make sure you follow me on TikTok, scan the QR code. Appreciate everybody that's subscribed on the YouTube. Share the channel with your family and friends. And most of all, subscribe to the Discord. That is where you're going to get all the information and access to me. Thank everybody for coming today. We got the charting session starting at 8:15. Everybody that's in the Discord is going to be there. I'm going to do that on TikTok. I'm going to figure out this TikTok live situation. But we're going to get that charting session live on there as well. All right. I'll see you.